Hello guys, this is fairbinaryoptions.com here. So this is a mistake. Let me make it quick. So fairbinaryoptions.com here, and what we are looking at is the US dollar and the Swiss franc. This is a currency pair that spells trouble all the time when you're looking for safety or you're looking for market to react for safe havens. This is a currency pair that, like mentioned a bit earlier, spells trouble. The reason for that is the fact that the Swiss franc is perceived as being on the same place or on the same risk level with the Japanese yen. So every time market is flying to risk, then you'll have a move out of the Swiss francs and Japanese yen. But when there is a risk on move, then you have a move into the Japanese yen and the Swiss franc. In our situation here, we're looking for a possible rising wedge, and this rising wedge to come here like this. So this to be 1, 2, 3, 4 and 5. This is a rising wedge, as you can see, that comes in the form of a terminal impulsive move, and that means that the lows prior to the terminal impulsive move should be broken. So I'm talking about these lows here that should be broken. Let me move the logo here. Therefore, what I would like to see here is for price to go and make one more high, even though it is not mandatory. But let's say for price to make a one more high, and therefore, so to see that trend line to be broken there. So this is a 2 to 4 trend line. To see that trend line there to be pierced, even though again the piercing is not mandatory, and from that moment on, we should engage into buying put options, or we should go and buy put options if or when price is breaking this trend line here. Actually, to be honest, I'm looking for buying the put options by the time market goes into this area here. So at those highs, 88.70. Now we are at let me check. We are at 88.49. So 88.70. I would like to go and buy put options, with, of course, the expiration date being end of week expiration date. Why end of week? Because we want to avoid price to spend here in consolidation, or to spend more time in consolidation. We want to avoid such a situation. In terms of Elliott waves, this is being called a terminal impulsive move, and this terminal impulsive move should completely be retraced. So if you're looking at a target or a regular target to the downside, consider 87.34. But when you trade binary options, you need for price to move to your favor only with 1 pip, and therefore that option would be considered profitable. It remains to be seen if the market will indeed do such a thing. Look here at this area as being a previous support area as well. This is a terminal impulsive move in the form of a rising wedge. Normally the 2 to 4 trend line should be as clean as possible. It is as clean as possible, and this should be labeled like this: 1 to the upside, then the second wave to the downside here, A, B, C, like this, the second wave here to the downside, maybe even like this. So 1, 2, then a third wave to the upside, all the way to the upside here, the third wave here, then a fourth wave, A, B, C, and then now a fifth wave to the upside, and this fifth wave should go here around 88.80 area, 88.82. That would be the target. So thank you very much for being here. This is fairbinaryoptions.com. We just bought put options. Let's write on the screen. We are buying put options by the time market reaches the 88.70 level. 0.8870 comes, with end of week expiration date. Rising wedge, terminal impulsive move, fairbinaryoptions.com, and all these analyses are possible due to the help